Hillary Clinton is cleared and gold is paying the price. The metal sold off as news that the FBI cleared. Hillary Clinton came in over the weekend. Joining us now is Bill Baruch of iitrader.com. He joins us from the floor of the CME. Bill, thanks so much for being on with us.
Thanks for having me on today.
So gold futures settled down about 25 bucks at $12.79 an ounce. Traders who were long at Friday's close found that the exit was $20 lower at the Asian Open. So what is a gold trader to do here, Bill?
You know, you want to be nimble. You don't want to be married to position. Obviously, there is still some uncertainty on the table. We have the whole election tomorrow. And we've seen a very fickle gold market over the past 2 months. From it breaking 1,300, basing at 1,250, and really surprising everybody. You know, when the market was at 1,250 through the month of October, we saw short positions increased 100% while the market was essentially on the lows. We saw long positions decrease 30%. These are all managed money positions I'm referring to. And so this emotional market seeing selling on the lows. And then just as we had the rally over the past 2 weeks, we've seen the short positions decrease 30% on the highs over the last commitment of traders through last Tuesday.
Right.
So we're seeing people chase this market around. You have to stay nimble, and it's you know, use the levels, be very technical with it if you want to stay alive.
Well, is it almost better to just watch on the sidelines then than to attempt to trade this election, Bill?
You know, you really got to take a step back from the forest to see the trees here. I think the important thing to remember is that gold has value. I mean, we tell our clients that we believe that gold has long-term value. 1,250 is a big level. You know, once we get through this election, still we're not sure who wins this thing. We had the Fed, and they may hike. But remember last year, 60 days from last December's Fed meeting and rate hike, then we had gold $200 higher. So I still think that gold may react to a hawkish Fed and a potential hike if the coast is clear and Clinton's in, but ultimately gold has long-term value. So when I say look, get out of the forest and look at the trees, remember what your longer-term fundamental picture is here. And if you like gold, and you want to buy, and there is some really solid levels here that we'll get to in a moment. If you want to be long gold through the election, buy some puts, go long puts, right, and then against some long futures to protect yourself and mitigate risk.
Well, that said, what are the key levels you're looking at? Do you think that 1278 is providing a strong base here going into Tuesday evening?
Well, the 200-day moving average has edged up to 1280. We're aligning that level, 1280 with 1284, a retracement point. And that's the area that really we wanted to see it close above. Yeah, it closed below. I'm also looking at 1276 and 1277, the little pocket there. A lot of volume traded. When the market was trying to punch through there, that was where the 200-day moving average was at the time. So I'm still watching that. It held that into a close. Yeah. Really, you don't want to see a close well below there. If that happens, then we could start to see 1250 come back into the cards, some long-term trendline resistance that now aligns at 1250. So there is some support, down through there. If the market really takes a hit, we could see 1200 hit. But ultimately, we remain long-term bullish. And then to the upside, we're going to get it back above 1305, 1309 on the December contract. Ultimately, if gold gets out above 1320, look out. We'll be back at the highs. And again, if we don't know who's going to win the election. If Trump wins, gold could be easily back at 1370 by the end of the week. So just stay nimble and make sure you manage your risk properly.
Right. Well, it's going to be an exciting 48 hours. Bill, thanks so much.
Thank you very much.
And thank you for watching. We'll see you tomorrow for a new edition of Kitco's Gold Report.